Good afternoon, everyone. My name is Jana Platt. I'm Director of Programming at Business Forward. I am honored to moderate this panel on securing retirement for working Americans. We have some great panelists with us today. We have Ways and Means Committee Chairman, Congressman Richard Neal, Mark Perrone, International President of United Food and Commercial Workers, John Murphy, Vice President of the International Brotherhood of Teamsters, Timothy Driscoll, President of the International Union of Bricklayers and Allied Craft Workers, and Ben Harris, Senior Advisor for the Biden for President campaign. Most Americans have little to no retirement savings, and our country is in the midst of a retirement income crisis. President Perrone, Vice President Murphy, and President Driscoll will each talk about their efforts to protect and improve Social Security. They will also discuss the multi-employer pensions they offer their members, and the chairman will discuss his efforts in the House. Ben will be speaking last, in part because it will be up to our next president and the new Congress to help facilitate these conversations with our esteemed panel. Vice President Biden, Senator Kamala Harris have articulated a bold agenda for retirement security, but they've also made it clear that this is something that Washington can't do alone. Before we get started, I'd like to cover a few items. You can participate by emailing your question at info@businessfwd.org, and I will read it out loud during Q&A. Please include your name and where you are emailing from. Again, that's info@businessfwd.org. Please note this call is on the record. There may be some reporters present. I'd like to thank our host committee sponsors before we go in: the International Union of Bricklayers and Allied Craft Workers, the International Brotherhood of Teamsters, United Food and Commercial Workers, and our panelists for making time to be here today. I'm glad we're able to join virtually. I know we would all like to be here in Milwaukee and after this panel, possibly grab a beer to discuss more, but I'm glad that they're all here with us. Before we dive into our Q&A, I would love to go panelist by panelist for them to give a little bit of background on themselves, their organization, and why they're committed to retirement security. We're going to start off with our favorite, Chairman Neal. Can you please start us off?
Thanks, Jana, very much, and thanks for including me today. One of my priorities as the chairman of the Ways and Means Committee has been to help Americans prepare for a financially secure retirement. So I was pleased to join the panel today on this important topic. I have been unyielding in my support of Social Security and a fundamental belief in the whole notion of what retirement ought to look like for members of the American family. Tens of millions of workers in this nation today are reaching retirement age without the savings that they need. The crisis in America is real, and it's only going to worsen unless we have an opportunity to make saving easier and earlier, to do more to encourage workers to begin planning for retirement. The pandemic has made things worse. According to a recent study from the Center for Retirement Research at Boston College, about 75% of those who have lost a job due to the pandemic are now at risk of being unable to maintain their standard of living when they retire, which is more than a 20% increase since the pandemic began. I've really worked this issue for years. Retirement savings for me is second nature. I've partnered with other panelists, but I'm attempting to address this problem for many retirees in the multi-employer pension crisis. 10 million Americans participate in multi-employer plans, and about 1.3 million of them are in plans that are quickly running out of money. I saw John Murphy there. Two of us worked diligently to assemble a construct that might, I think, provide a path to making these plans more secure. These challenges are not based on malfeasance. These challenges are based upon what has happened in the marketplace over these many years. And as I've mentioned to the president, mentioned to Secretary Mnuchin and others, these problems grow worse monthly, not yearly. There are American workers who plan for their retirement, and after working 30 plus years, they're facing uncertainty at a time when they are unable to return to the workforce. It's worth noting that we haven't arrived here because of bad decision making. Helping these Americans address the multi-employer crisis has been a priority of mine, and I know a priority of our fellow panelists. Last year, we were successful in passing the Butch-Lewis Act on a bipartisan basis. I emphasize 30 Republicans voted for the Butch-Lewis Act. Incidentally, all in Ohio, Michigan, and Pennsylvania, and in West Virginia. It's the most important labor legislation in more than a decade. It would give millions of workers and retirees the security that they have worked and planned for in their golden years. The Butch-Lewis Act would allow pension plans to borrow the money they need to remain solvent and continue providing retirement security for retirees and workers for decades to come. The idea of a loan program is common sense. It's a private sector opportunity to come together with the public sector to address the crisis. I know there's a counterpart in the Finance Committee. Senator Grassley has released a white paper that purports to address the crisis. One of the major problems is with his proposal because it has no stakeholder support. In the spirit of bipartisanship and to do everything we possibly can, we made some modifications to Butch-Lewis to take into account the framework of the Grassley Act. This new version of Butch-Lewis is the HEROES Act, and the House passed it a few months ago. You have my commitment. I will do everything I possibly can to try and get this legislation over the finish line as soon as possible. I've had numerous conversations with Speaker Pelosi on this very issue. I am prepared to get this done. I'm also focusing and helping Americans save more for retirement. Last year, I was very pleased that we were able to enact the Setting Up Every Community for Retirement Enhancement Act, also known as the SECURE Act. That is the most important advance in retirement savings in over a decade as well. It will go a long way toward addressing our retirement crisis and help Americans work and save for retirement. It will make it easier for small businesses as well. The result is that up to 700,000 new retirement accounts might be formed. So we're working on the next stage of the SECURE Act, the multi-employer pension challenge, which is the Butch-Lewis Act. The Savers Credit under current law provides a tax incentive for Americans to save, but more can be done there to reform the credit to make it more like a matching contribution and to simplify it so it doesn't encourage people to save if they don't understand it. I feel very strongly about all that I have just authored and spoken in support of. And I'll just close on this and have a chance to talk to our panelists. Retirement is supposed to be a three-legged stool. Personal savings, a pension, and the bedrock guarantee of Mr. Roosevelt's genius, the Social Security plan. Always remember, you can outlive an annuity. You cannot outlive Social Security.
Thank you so much, Chairman Neal. Also, thank you so much for the comments on small business. Next, we will turn it over to President Perrone. Could you please tell us a little about your organization's work in securing retirement for working Americans?
Yes, Jana, thank you. Thank you so much. And Mr. Chairman, thank you for all your hard work in this retirement security crisis that we're facing. You know, more than in any other time, America is in fact in the state of crisis, a crisis that's not just defined by a horrific pandemic or the economic catastrophe that's ensued from that. I would argue that the real crisis that we face is defined by a complete and utter lack of leadership. The nightmare that we are living in is a direct result of a president who believes that blaming others is a strategy, and that the indifference to problems, quite honestly, is a policy solution. It's this kind of mentality that's directly fed the current crisis that we see with respect to our nation's pensions and retirement programs. And what all Americans should be able to agree on is that all working people deserve to retire with some dignity. You know, but a pension is not just about dollars and cents so much. It's about a sacred promise that we have that rewards a lifetime of work and sacrifice. You know, unfortunately, as you all know, that promise is being broken by short-sightedness, greed, and an abject level of commitment to a generation of workers in this country. Most of our nation's workers have virtually no retirement savings at all. And the current financial crisis that's led to more workers depleting what very little savings that they had. Social Security provides limited retirement benefits to working families, and it's under constant attack by short-sighted politicians that seek to undermine its funding and limit the real financial benefit that it offers these workers. With respect to workplace retirement plans, only about half of working age households participate in such plans, with the majority of these workplace plans today being 401k benefits, where all the investment risk falls on the participants. And what I'd like to emphasize is the critical role that DB plans have for millions of workers and what must be done to ensure that these workers are able to retire in dignity. In fact, there are about 1,400 multi-employer plans covering about 10 million participants, as the chairman said. These plans are collectively bargained and maintained by more than one employer and one union. Because of the failure of corporate America's leadership to do what's right, some of these plans are, in fact, facing unprecedented challenges. According to the PBGC projections, approximately 150 to 200 multi-employer plans covering 1.5 million workers and retirees could run out of money in the next 20 years. And this doesn't include public and corporate plans. If nothing's done, the PBGC multi-employer program, which exists to fulfill a federal promise to backstop plans that might become insolvent, it's itself projected to run out of money in the next 5 years. Now, obviously, this is a very complex subject, and there are quite a few detailed remarks that I could make about the situation that we find ourselves in. But I'd like to stress 2 key points. First, the challenges that some multi-employers plans face are absolutely no fault of the workers or the participants who are in these plans, who have earned these benefits over time because they've foregone wages and other benefit increases. These benefits belong to these hardworking men and women. They're promised these benefits, and they deserve to get these benefits. However, these pension benefits have been undermined by perverse incentives that were created in the 1986 Tax Act, industry and financial deregulation, a bankruptcy code that allows employers to walk away from their pension obligations, and pension rules that result in the elimination of benefits, and a lack of adequate funding, and as we know, 3 basic black swan events in the last 15 years. But there's also been a number of policies that have encouraged a dramatic shift to 401k programs. But my second and final point is this: it is time, and time has come for Congress and the executive branch to fix this crisis, not only because we have a moral obligation to do so, but also because it's good public policy. The deterioration of retirement security not only destroys lives, it weakens our communities. Failure to act will only increase the cost of this inaction. By one estimate, the failure to fix the problem will cost taxpayers $332 billion to $479 billion over a 30-year period. For the sake of a better and more just America that we all want, one that values the rewards, the hard work and sacrifices of a lifetime of work, we must protect the retirement of the American workers have earned. We must choose to lead where others have not. Most importantly, we must ensure that the promises made to the men and women that help build, feed, care, and protect this nation are not broken. Thank you, Jana, for the opportunity to speak to the group today.
Thank you so much, President Perrone. You are so right. It is time, and I'm really excited to hear more about some of these partnerships during our Q&A. Next up, we will have Vice President Murphy. Vice President Murphy, take it away.
Good afternoon, everyone. Chairman Neal, Mark Perrone, Tim Driscoll, and Ben Harris, and the viewers out there in the United States. Chairman Neal mentioned the fundamental bedrock of the American retirement system. He calls it a 3-legged stool in many of his other presentations: Social Security benefits, pensions, and personal savings. In this country, Social Security and pensions for workers are under attack and are facing serious, serious consequences unless the American government and the American people rally to shore up our system. And the pension system, defined pension benefit plans were and are the primary income stream for millions of Americans. In the 1970s, 80s, and 90s, as our economy shifted from an industrial-based to a service-based economy, industrial unions declined because of trade deals, deregulation, and anti-union laws. Pension funds, union pension funds, declined proportionately along with the membership in all of organized labor because the participant base was shrinking, causing the pension funds to increase their demand for contributions for active employees to pay for the benefits for a growing number of employees, which then created a funding gap, which forced pension plans into the equity markets with all of the risks that come from participating in the stock market. Today, approximately 125 pension plans face insolvency within the next 10 to 15 years. The largest of these plans, the Central States Teamster Plan, is predicted to collapse in 2025. Another 200 multi-employer pension plans are on a path to insolvency over the next 3 decades. Approximately 3 million participants and their families face a bleak retirement future. In 2014, the Multi-Employer Pension Reform Act was passed that allowed pension funds to cut benefits to retirees and active workers, reversing more than 40 years of public policy in ERISA, which is to protect pensions of retirees and workers. The collapse of pension plans will devastate retirees, depriving them of a major portion of their income and causing severe shock to the American economy. A 2000 economic impact study by Quantria Strategies, commissioned by the IBT, illustrates the point. Over a 10-year period ending in 2029, if the Pension Benefit Guaranty Corp pays its meager benefits to retirees and bankrupt plans, the decline in tax revenues, talking federal, would be $7.9 billion. The decrease in economic activity due to the loss of retiree benefits will be $138 billion. The cost of the PBGC benefits will be $59 billion. If the PBGC goes insolvent, as it is projected to in 2025, and can't pay its insurance benefits to retirees, the decline in tax revenues will be $14 billion. The decrease in economic activity due to the loss of the retiree benefits is $245 billion. The 2018 study estimated that the 10-year cost of the Bush-Lewis Act loan program would be $30 billion over that same 10-year period. What is not estimated is the exploding demand for social programs and public services that retirees would need for the loss of their benefit. The Bush-Lewis Act, Richie Neal's bill, the Multi-Employer Pension Rehabilitation Act, passed the House in July of 2019 with bipartisan support. It created a loan program to fund current retiree life benefits, and the proceeds of the loans would come from the dedicated sale of treasury bonds. Loans are set up in separate portfolios from which retiree benefits would be paid and guaranteed. These loans would be paid back over 30 years. Unencumbered assets of the plans and revenue from employer contributions would be able to pay back the loans. The MPRA, which cut benefits, that law that allows cut benefits, wouldn't be necessary. There'd be no need to raise PBGC premiums because liabilities would be funded. the Butch-Lewis Act has evolved into the Emergency Pension Plan Relief Act, would instead of loans, would transfer liabilities from these failing plans to the PBGC, which Treasury would fund in full, from which 100% of the retiree benefits would be paid. The same principle of Butch-Lewis, freeing up the assets of these pension plans, allowing the employer contributions to come in so those plans could recover. In closing, Congress must fund the failing pension system. General President Hoffer of the Teamsters has made a commitment in 2015 to millions of retirees and workers that he will not rest until we solve this problem. And as long as we have Richie Neal being our champion in Congress, we can do this, and we can do it under a Democratic President Joe Biden. This is important to millions of workers and retirees. We must solve it.
Thank you so much, Vice President Murphy. The smile on my face hurts because I am with you with all of your passion. So thank you so much. I'm very excited for some of these follow-up questions to hear more about it. Next up, we will have President Driscoll. President Driscoll, I would love to toss it over to you. Oh, you might be on mute. President Driscoll, I think you're on mute.
Thank you, Jana.
Of course.
So thanks, Jana, and thanks to Business Forward for providing this forum on retirement security. And thanks to my fellow panelists and principally Chairman Neal for his leadership on this issue. My name's Tim Driscoll, President of the International Union of Bricklayers and Allied Craft Workers. So for workers in the construction industry, the multi-employer pension system is the linchpin for a secure retirement. It enables workers who are often employed by dozens of different companies over the course of their career to establish a single, reliable pension for their decades of hard work. The work of a bricklayer, stonemason, tile setter, or any of the craft workers we represent is highly skilled, but it also is physically demanding work that takes its toll. That's why our members knowingly defer wages at the bargaining table each year in favor of contributions to their pension plans. They know they're earning pension credits so that when the time comes for them to lay down their tools, they can do so with dignity, knowing that they've built a safe and secure retirement for themselves and their families. To be clear, though, the health of the multi-employer pension system is much larger than the millions of construction workers and others that depend on it. In the midst of this current pandemic, the continuing flow of dollars that these pensioners spend in their communities every day supports small and large businesses in every town, city, and state in this country. That's why ensuring the health of this pension system is so critical. Now, our members are not alone in wanting retirement security or in the willingness to work hard. As Mark and John indicated, more than 10 million families across an array of industries rely on the multi-employer pension system, a system that's worked well for decades. Even today, the vast majority of plans are financially stable. However, the critical status of some plans is such that the entire system is now in danger. So many factors have brought us to this point, have been pointed out by my fellow panelists: flaws in the laws governing pension plans, the financial crisis and Great Recession, vagaries of the stock market, deregulation, and bankruptcy rules that allow companies to escape their obligations. But none of this was caused by the workers who were promised and who earned the pension benefits now at stake. They worked hard, played by the rules, and traded wages for pension fund contributions, even when that was hard to do. They deserve the benefit of the bargain they made throughout their working lives. So it's long time past for Congress to address this issue. And recent legislative action in the House of Representatives proves that it can be done. I want to thank Chairman Richie Neal for his leadership on this issue. While others have made excuses for inaction, he has continued the fight to find a solution. Under his leadership, the Ways and Means Committee examined this subject at length and developed the bipartisan Butch-Lewis Act that ultimately passed the House of Representatives. And more recently, Chairman Neal and others in the House worked to pass the HEROES Act, including the Emergency Pension Plan Relief Act, known as EPRA. EPRA provides immediate relief to the multi-employer pension system by giving retirement plans the breathing room and tools to right themselves. First, it includes annual funding to support an expanded partition program for those troubled plans so that they have a better chance to restore stability for remaining employers and participants. EPRA also extends amortization and funding improvement and rehabilitation plan periods. It also permits plans to freeze their 2019 zone funding status so that healthy plans have more time to recover investment losses tied to the devastating impact of the coronavirus. Now, we know that all of this relief is badly needed as the problem grows with every day of delay. Unfortunately, Mitch McConnell and his allies in the Senate show no interest in being partners in this crisis. Rather, the GOP leadership in the Senate is fixated on the misguided Grassley-Alexander proposal. This proposal contains provisions that would actually make matters worse, such as mandating investment returns that would effectively push healthy plans into severely unfunded status, proposes self-defeating increases to insurance premiums, and imposes unnecessary new taxes, including on retirees themselves. So we appreciate the work of the House to address this issue. Passage of EPRA shows what could happen with a new Congress and a new administration. Vice President Biden has always put the needs of workers first. He understands the importance of pensions to working families and the communities they live in, particularly during this pandemic. We look forward to working with the Biden administration that will prioritize retirement security for all Americans. Thank you.
Thank you so much, President Driscoll. Now, I'm really excited to turn it over to our final panel member. Ben, can you tell us a little bit more about what the campaign is doing in terms of securing retirement?
Sure, and let me just start off by saying thank you for having me on this panel. It's such an honor to be here with all of you talking about this critical issue. So I'm going to spend a few minutes just going over the campaign's overall retirement policy, hitting on all of the critical issues like Social Security, health, multi-employer pensions, 401ks, and retirement saving. I'm going to hit the high points, happy to answer any questions about the plan after that. To start off, let's talk about Social Security. And this is the most important point. If you take one thing away from these next 5 minutes is this: Joe Biden will protect Americans' Social Security and Medicare at all costs. Full stop, period. He will protect them. It is a top priority. It's part of the middle class livelihood, and he will protect them with everything he's got. This is in sharp contrast to President Trump, who you saw just a few short weeks ago, just casually off the cuff proposed defunding Social Security like it wouldn't result in this incredible shock to millions of Americans who depend on it. The visions could not be more different. Underneath that vision are 5 distinct proposals, and I'll go through them in turn. The first on Social Security is the Vice President wants to increase everyone's benefits by switching to an inflation index, which better represents what older Americans buy. This is the CPIU. In practice, this means an increase in everyone's benefit over time. The second part is a higher minimum benefit for low-wage workers, because honestly, no one deserves to be in poverty after you've paid into Social Security for 3 decades. That's crazy. Joe Biden will ensure that no one does. The third part of the Social Security plan is a higher benefit for the oldest beneficiaries who've been on Social Security for 20 years or more, plussing up their monthly benefit to help them cover unexpected costs. The fourth part is to protect widows and widowers from steep benefit cuts on the passing of a loved one. And the fifth part of the plan is, again, a commitment to putting Social Security on a path towards long-run solvency. Now, this sounds expensive, but these can all be paid for in a fiscally responsible way with one change in the tax code, and that's asking people who make more than $400,000 a year to pay into Social Security at the same rate everyone else does by paying the 12.4% payroll tax. So that's the basics of the Social Security plan. Let me now pivot to retirement accounts. Under Joe Biden's vision, every single worker in America will have access to a retirement plan. Now, hopefully that's a pension, which provides unprecedented security. but it might be a 401k, or it might be adopting Chairman Neal's vision, which is making workplace saving available to every worker in America. But Joe Biden's committed to that. For small businesses that want to introduce a workplace plan, they'll get a small tax credit to help cover the costs. But also, and this is a big part of the plan, which hasn't got a lot of attention, over the next 10 years, Americans will get roughly $3 trillion in tax benefits for contributing to a 401k or defined contribution type pension, but it's distributed incredibly unequally. If I'm in the 0% tax bracket and I'm paying payroll taxes but not income taxes, I don't get any real benefit from putting $1 in a 401k. But if someone's in that top tax bracket, they get 37 cents on the dollar for every dollar they put in there. What Joe Biden will do is he will equalize the benefits for contributing to 401ks across the board, so everyone, regardless of what your income is, gets the same per dollar benefit. So if I'm making $50,000, I'm making $1 million, I'm making minimum wage. If I'm able to contribute to a 401k, I get the same benefit as everyone else does. Let's talk about multi-employer pensions. I mean, you've heard from the other panelists how critical this is to the 10 million workers who have paid into this and who have earned benefits that they deserve. There's no reason to ask these workers to accept a broken promise. Joe Biden, if you want to take away a second key point on this, is that workers deserve to have the promises their employers made to them about their pensions fulfilled. The difference between a statement and a promise is you don't break promises. And these workers were promised these benefits, and Joe Biden will fulfill that promise. Now, he's gotten behind Butch Lewis. He's gotten behind EPRA that was included in the HEROES Act. Over the first 2 years of his administration, he will convene a process that gives a seat at the table to labor to work out a solution. He's committed to that. So I want to reiterate, Joe Biden will honor the promises made to these workers that they deserve and to have a secure retirement. Lastly, when we talk about health, he's offered a series of common sense reforms, recognizing that security and health is a big part about security and retirement. So the first is to allow people to buy into Medicare at age 60. The second is to eliminate the 800,000 person waiting list for Medicaid beneficiaries to receive in-home and community care, which has become so much more important in the wake of COVID, where many people are in institutions where they don't feel safe. And lastly, he'll allow Medicare to finally fully negotiate on prescription drug prices, something which Medicare should have done for a long time. Collectively, this is a vision where everyone gets a secure retirement, everyone who plays by the rules, who pays into a retirement plan, who does everything they can to contribute to the US economy, deserves to have a fair and secure retirement. It's a critical part of the middle-class livelihood. And with Joe Biden as president, we'll take the steps we need to get there. Thank you very much.
Thank you, Ben. Great points, great points. My first question is going to be for Chairman Neal. And Chairman, I'm going to take moderator's privilege at first and ask a question, because as we were starting to pull together this panel, your name, of course, is brought up multiple times. So I have a twofold question. One of them is mine. One of them was emailed in. I'm going to ask my question first. But what has driven you to be a leader in helping some of this crisis? The second part would be, we talked a lot about the Butch Lewis Act. What are our prospects? I know you said there's some synergy over in the Senate, but do you think we can get the Butch Lewis Act over the finish line this year?
Yes, I do. With President Biden, I think we can. I've been talking to his economic team, I'm sure as Ben knows, and they've reassured me of their interest. This can happen. Secretary Mnuchin actually understands the nature of the problem. I'm not sure President Trump does, but the secretary does. My interest in retirement savings comes from the fact that my parents died when I was a young guy. I was raised by my aunt and my grandmother. And we were raised on Social Security survivor benefits, their small pensions, and again, the genius of Social Security. So I've taken an interest in this probably all the way back to the late 80s. In 85, 86, which was noted, when the savings and loan crisis came about, I wasn't there to create the problem, but I was there to help solve it. You just have to do it. It didn't cost what everybody said it was going to cost, but man, Congress acted in record time to buttress that system. What we're asking for, as John Murphy described and Mark described and Tim described, we are not asking for the federal government to bail out the multi-employer pension plans. We're asking them to backstop the plans, nurse the ones that can get back on their feet, address the ones that are in more difficult situations, but nonetheless, not say to somebody who's 58 years old, you're going to take a benefit cut. I was pretty aggressive in the Democratic caucus when I heard a couple of members say, well, we're going to have benefit cuts. I said, no, we don't. And in fact, if you start the conversation with benefit cuts, you're going to bid it down. Mm-hmm. And the system here is one of, we need to make these plans whole by allowing the full faith and credit of the United States government to loan them money. And then we set up in the Treasury Secretary's office somebody on a day-to-day basis to manage the problem. So for those that are really in tough shape, you can try to nurse them back to health. But the full faith and credit of the United States will keep them solvent. I think that's really, really important. And I just will say this, and I've been saying this to Vice President Biden's economic team. They said, well, how do you think we ought to proceed? I said, I think the vice president ought to go to the steps of the Cleveland City Hall and announce that he's in on the Butch-Lewis Act and all of the other provisions that we've put together. This is a big issue going into November. You know, these are the people that used to be with us 100%. Mm-hmm. We need to drive this, as you noted, Jana, over the finish line.
Thank you. Thank you so much. I'd love to give an opportunity to Vice President Murphy. You've talked a lot about, the evolution of the Butch-Lewis Act into the Emergency Pension Relief Act, but I'd love to give you a chance to respond to kind of what Ben has said and what the chairman has just mentioned. You were very passionate, so I wanted to give you some time.
Thank you. Yeah, I am passionate about this because this issue is real. It involves millions of Americans. Let me tell you a story to sort of illustrate what this means to regular Americans. A few years ago, I was in Buffalo, New York, talking to a large group of retirees about an application by the Central States Pension Fund to cut their benefits. And after the meeting, a gentleman came up to talk to me. He was a Teamster car hauler. And he proceeded to tell me if his pension was cut, he would have to put his wife, who has multiple sclerosis, into a Medicaid nursing home. And tears came to his eyes. And that's what I mean when I say this will be devastating to American retirees and their families. Last year, a 72-year-old woman called me, and her husband was in a Teamster pension fund, a tiny one, which cut benefits, and he passed away. Her monthly check is approximately $300. That pension fund had no choice but to file for a benefit cut and reduced her monthly benefit by $60 a month, which means to that elderly woman that she had to give up her apartment and move in with her daughter. This is the kind of impact the attack on our retirement system will cause. These are human stories. When Franklin Roosevelt created the New Deal, he said to America's workers, the government will provide a social net to make sure that you can live with dignity. That net is being torn apart, unfortunately, by a lot of circumstances, and most Republicans are not willing to step up unless they penalize retirees, workers more by saying they have to take cuts. This country is wealthy enough that we can say to workers and retirees, no, you don't.
Exactly. Thank you. For a quick moment, I'm going to go right back to Ben to respond to some of the points from that. But I think, it's important for us to talk about that safety net. And hearing those stories, I'm sure, heartbreaking. And I'm sure those have gone into what the campaign is doing. Can you speak to a little bit more on, these aspects when you guys were pulling together parts of these plans? and if there's anything on the penalties as well that you'd like to touch on.
Well, let me just say, I mean, the idea for the whole retirement plan is that every American, whether you're retired or not, can see yourself in it. And everyone has different circumstances. Some people deal with health challenges. Some people don't want to be a burden on their children and just want to have long-term care available for you. Some people really just want the opportunity to save, and some people really value pensions, which is why they choose careers that and occupations that have pensions. And so the idea is, look, retirement means a lot of different things to different people, but the idea is for every single American to see themselves in a secure retirement with this plan. And let me talk about multi-employer pensions. It is so important, and it's real people getting affected, but it's also an issue of fairness. I mean, in this country, we honor the rule of law, and just because that compensation is deferred doesn't mean that anyone has any less right to it. If you go up to a 60-year-old worker and you say, you were paid $30,000 30 years ago, I'd like to have half that back, I mean, anyone would say that's crazy. So just because this compensation is deferred, it doesn't mean that workers have any less right to it. So there's a real fairness aspect to the multi-employer pension issue. And in addition, I mean, it just means everything these 10 million workers who spent their whole careers paying into this, and they deserve it and they should have it, and it will be protected under a Biden administration.
Thank you, Ben. I want to give time to President Perrone. I mean, we'll throw it over to you. You have been nodding your head, kind of applauding your fellow panelists. There was a question that was emailed in, but I also, if there's if you want to respond to any of the comments that we've had before, but the question that I would like for you to touch base on is, this one was from Pennsylvania, was how has the pandemic changed the way we looked at retirement security?
I think I unmuted. I think sure. I made mention of it earlier in my remarks. What I said is that because of the pandemic, people are finding themselves with no money in the bank because they've had to spend whatever sort of savings that they had. And I think that we have to look at those that had defined contribution plans and Social Security, that a lot of times their income is 3 times what somebody has in a defined benefit plan, as well as Social Security. In other words, what I'm trying to say is those people that have defined benefit plans in most cases are not titans of industry that have large amounts of money that they can put away in a retirement account. They're living from day to day on what they're being paid. And I do believe that it's imperative, given the fact that they knew they didn't have the financial acumen necessarily to create a retirement account that was going to pay them forever, and they opted to forego wages and other benefit increases in order to get it. Ben, I am ecstatic to hear what you just got through saying. You're absolutely right. These people gave up wages in the past in order to have a benefit when they retired. And it is criminal what's happening when these things get taken away from them. Well, maybe not criminal, but it's really bad.
Yeah. Agreed. It's awful.
It's not against the law, but it's happening.
Yeah, it's happening. It's awful. It is not fun. So I would like to, I may be jumping out of order, but if we could pull up President Driscoll, there is a question on the multi-employer system, and is it possible for small employers to provide defined benefits?
Okay, thanks for the question, Jana. And to echo Mark's remarks as well, it is criminal that something along the lines of deferred compensation could be seen as a promise not kept. Absolutely. For my union, the typical employer is anywhere from 10 to 12 employees, not exactly a large business. Often they join with us because they have access to benefits that they otherwise wouldn't have as small employers. They get economies of scale and access to programs when they've pooled both their resources and their liabilities with the larger group. The first step in that is a union collective bargaining agreement. And that should not be ruled out by anyone as a possible step. In fact, that's the fundamental building block that all of our benefit programs are built on. And I was very happy to hear Ben say that that was something that the Biden administration would be adamant about supporting.
That's great. I think there were emotions that people could pick on the channel, and saw some of those hand clappings, Ben, while you were speaking. So that was great. I'm going to go back to Vice President Murphy. We've been talking about the stretch of some of the systems, and again, talking about some of these safety nets. And I would like for you, if you could give us kind of what are the dangers of cutting payroll tax on that Social Security system?
It's very simple and straightforward. If you have less money going into the Social Security trust funds, that means that there'll be an unfunded liability down the road. And there's only a couple of ways you can fund that gap. Raise the Social Security taxes or do the unthinkable, reduce benefits. This is what I meant and what Chairman Neal meant in our opening remarks. There is an attack on the American retirement system. If they get away with cutting defined benefit pension fund benefits for retirees and workers, it will be much easier for the right wing to start advocating and pushing cutting Social Security benefits. That's the prospect that faces us. That's why this election in November is the most critically important for retirees, senior citizens, and workers. The choices couldn't be clearer. If we want to protect our social safety net system, we have to vote for Joe Biden.
Great. If we could pull Chairman Neal back up. Chairman Neal, I see that you are taking a lot of notes and wanted to make sure you had an opportunity to respond to some of those comments. And I mean, you're taking on a lot in the House, and when you talk to your colleagues and what's going on, are these comments that they're hearing as well? Are these regular things that we're hearing day to day? And is there a big focus on some of our low income, some of our some of the communities that are often overlooked?
When you consider that half the people that get up and go to work every day in America are not in a qualified pension plan, it's pretty wild. And as John noted a moment ago when he was talking about Social Security, the average Social Security annual benefit is $16,000 a year. That's a little more than, about $300 a week. And the reason that this is important is because getting young people into a pension plan earlier makes enormous sense. And I've had an auto IRA plan. I am moving forward on beyond the Secure Act to Secure 2.0. Defending, as was noted by our panelists, the whole notion of Social Security. But there are other things that we can do, like automatic enrollment. And we can make sure that we don't make it too easy for people to put in $50 a week, take out 25, put in 30, take out 40. So leakage is a very important part of the retirement discussion as well. But I just want to go back to that example I used earlier. The problem with the multi-employer, or the challenge that faces the multi-employer pension plans, it's not about malfeasance. The S&Ls was about these guys robbing the bank. That's not what happened with the multi-employer pension plans. So we, out at John's local, 25, I think, in Boston, we arranged to have, at the time, John Hancock come out, the insurance company, and they said, we'll buy the bonds. If the Treasury Department will sell the bonds, we'll buy them. and putting in place a czar inside of the Treasury Department to oversee the multi-employer pension plan challenges just makes enormous sense. And it's something that is imminently doable because the problem gets worse every month.
And do you feel like your colleagues in the House also understand that? Is that something that that we're seeing across the board?
Oh yeah, the challenge is if you have these private conversations and you're not running to the cable shows every night, many of the Republicans accept the idea there's some things you've got to do, because we're never going to buy into benefit cuts on Social Security. I can tell you that. And at the same time, we need to make it easier for people to save. And by the way, make it attractive through the tax system to save. That's another important consideration. We don't want these plans to be top heavy, where all of a sudden the people at the top have these generous benefits. And always remember, at Enron, on Monday morning, it was the 8th largest company in America. On Friday, it was gone. And it was gone for those people who were 62 or 63 years old. Their retirements were gone. And I think those are the reminders that we need to keep in front of us.
Yeah, fully agree. I'd love to give a round robin, so time for each person to respond to this. We've heard a lot from what needs to be done, what we could see and happen in a few years, or we've heard numbers in 3 years or 5 years or 15 years. But I want to give everyone an opportunity to respond. We had a question from John Waddle from Columbia, South Carolina. And I'd love to start with President Perrone, and we'll go around. What is the plan, or what would your plan be to ensure that Social Security needs are met through 2075? So we've talked about 3 years, 5 years. What part of a plan can you see that can kind of carry us throughout these next few years and to the future?
So Mr. Waddle asked me what my plans would be. My plans is get Joe Biden elected and make sure that Chairman Neal is still around. Look, I certainly believe that we cannot in any way, shape, form, or fashion start the same path of trying to do 401k or individual investment accounts for individuals. Chairman Neal outlined a couple of those issues. He spoke of the fact that people may have leakage. They pull their money out, they take a loan. The same thing could ultimately happen with pension plans. Additionally, I think that it would leave them open to the Wall Street wolves. Look, the reason why that investments, ultimately need to be made by investment professionals, they don't generally let emotions get in the way. A lot of people, after they just saw the pandemic drop, pulled their money out of the market because they were scared. Mm-hmm. And then they set those losses in place, and then the market went back up and they didn't get the upside of the market. And so I would say make sure, just like John said, that the contributions still go there. You ultimately can end up with what I would call a pension contribution holiday if you're not putting the money in. And it would not dollar cost that money going into those markets when the markets were down and when the markets were up. And I think that if you do that, possibly, ask more money from the people that could afford more money at the top end. I think that's a reasonable request as well, especially when you're looking at 3 times, they have 3 times the amount of money that the people at the very bottom do.
Thank you. Thank you. We're going to go to Vice President Murphy for his comments.
Well, essentially, I'll be reiterating what Mark has said about this. To protect Social Security through 2075, we have to ensure that its revenue is constant and grows. We have to make sure that everybody in the United States pays their fair share toward the Social Security system. Right now, as you know, there is a certain amount of income at which Social Security taxes cease. Well, I think we may have to take a look at that. And fortunately for those people, they're in the upper income brackets. So it's not like they couldn't afford to help out their fellow citizens who are on the lower end of the income brackets. This is an issue, retirement security, that helps define the kind of society that we want to be. How do we take care of our elderly, our poor, our sick, and our helpless? That marks the kind of people that we want to be. The first step in recapturing those principles, we do it in November by electing Joe Biden, and make sure in Massachusetts in Congressional District Number 1, UFCW members, bricklayers, Teamsters, we make sure we vote for Richie Neal, and we'll be fine.
President Driscoll, we can throw it over to you. Your comments.
Okay, thanks, Jana. Yeah, well, to reiterate what both Mark and John have pointed out, obviously the revenue stream for Social Security needs to be supported and needs to be supported into the future. One of the things that really ties Social Security and pension systems together is the fact that it's a revenue stream that's dedicated, that individuals can't, as Mark had referenced, yo-yo in and out during the ups and downs of the economic cycle. That's what distinguishes them from a 401k. The 401k is fine, but to think that that's ever going to provide the same level of support is just fooling ourselves. Mm-hmm. The average 401k balance, which is a minority of people in this country, is 100,000. 100,000 is not going to get someone very far in their retirement. What we need to focus on is how we improve the revenue stream going in, keep the benefit costs that are the administration costs, related to those benefits manageable. Social Security has an administrative cost of less than 1%. That would be the envy of Wall Street. And just keep in mind that there's nothing more that Wall Street would like than to become the fund managers for every retirement dollar that's out there. I think we're the stewards of our own destiny. And I think if we have our priorities in place, we can get where we need to. And I'm positive that Joe Biden is the person to get us there in the fall.
Leading with that comment, I want to make sure that we give Ben and Chairman Neal an opportunity to respond. So Ben, you've heard a lot, and any last concluding comments from?
Sure. On the Social Security question, I laid out the major principles of the Biden plan at the beginning. So let me pivot and say this, that one of the reasons why we have a retirement security crisis in this country is because we have a wage crisis in this country. And one of the best ways to fix inadequate retirement is to fix inadequate wages. And the labor leaders you're seeing right here have been fighting that fight day in and day out. The difference is with Joe Biden in the White House, you'll actually have a president who cares about the fight that you're fighting as well. So if we want to fix retirement security, we've got to get away from a situation where people are paying 30, 40, 50% of their income towards housing, where you're stuck with student loan debt into your 30s after you finish accruing it in your early 20s, when you're squeezed from every angle. So that's the Biden economic vision, which is fixing retirement security through all the measures that I laid out at the beginning, but also through just fixing the inadequacies during a working life. The second point I'll make really quickly is that retirement is just part of a broader wealth building strategy. And if you look at the Biden plan, it's around wealth building around home ownership, a $15,000 first-time home buyer tax credit, and getting rid of a lot of the racist elements that have been part of the housing system for a long time. It's retirement security and building up retirement assets, but it's also on small businesses. It's providing capital to people and communities who haven't had the access to capital to start a small business. So the vision here is that people not only have retirement security under the Biden plan, but have all these other avenues towards building wealth. Whatever that means for you, wherever you are, the vision is, look, you'll have much more adequate and secure avenues for building wealth under the Biden economic plan.
Thank you. Great. Chairman Neal.
I think I'm probably going to vote for Biden after that presentation, Ben. Thanks. Look, I wish there was enough calm in the political system right now to talk about the retirement issues.
Yeah.
But we're going to have to depend upon all of you to keep this issue in front of the American people, because when asked about the future, they talk about retirement savings. And it's part of the whole notion of what old age ought to look like. It ought to be secure. So I'm anxious to work on this in a continuing basis with an administration that's all in. I think we got to get the Butch-Lewis Act over the line. I want to thank the union people that are here. I know there are some differences of opinion, but one of the nicest things that happened about 6 months ago in Speaker Pelosi's office, all the heads of many of these unions said, look, you got to do the Butch-Lewis Act, period. And I agree with that.
Well, Chairman, I know we all appreciate your leadership. I'm humbled to be with this panel. I am looking forward to all of us joining together. Again, I wish we were all together so we could, celebrate in Milwaukee, but I'm glad that we were here virtually. But I'm honored, I'm humbled, and we are out of time. So I appreciate everyone for joining and appreciate everyone for listening in.